Hello, it is Friday, Thursday rather, the 5th of February, 2009. This is Brian Shannon from alphatrends.net. The market's closed here. We had a very positive session after starting out on some weakness, a gap lower. The market turned around and traded some pretty big volume as well. The NASDAQ finished with a gain of 66 cents or 2.2%. And right up to the top of the range that we've been looking at lately. If we look at that 30-minute time frame, this is the area that's really been most troublesome for this market. Basically $30.60 to $30.75 or $30.80, let's call it. I had pointed out midday on the blog this cup and handle is what it's looking like, which is typically a bullish pattern. And if we can get above there, we fill in this gap, and then perhaps we take out these highs and continue higher. But realistically, we're still in a range-bound market, so you can't get too excited about the upside. There are encouraging signs, and I think today's action really puts an exclamation point with this gap lower. It gapped lower, recovered quickly. It puts an exclamation point, that is, on the fact that we remain in a trader's market. We had a higher low. The market bounced back above that VWAP and basically didn't look back. It came down and tested it late in the afternoon. But very positive session for today. Let's see what tomorrow brings. By the way, I've been posting today a little bit like a maniac in that Twitter. So if you're not following me over there, you really ought to sign up for an account at twitter.com. Go to Find People and then type in Alpha Trends, which is my username, because there's quite a bit of information you're missing if you're a follower of this blog and you want more frequent updates. Take a look at that. So the NASDAQ is clearly improving. It's up on the year a couple percent. 2.8% actually, and the strongest of the major markets we see the semiconductors are up bigger than that, but the market's giving us encouraging signs. It's just so hard to trust though, because we are in a primary bear market, and in earnings season, so there's a lot of risk still, but great opportunities intraday if you're taking advantage of the tools such as the VWAP and looking at prior levels of support. Here we saw that the market gapped down below the 5-day moving average and below that 2960 level, but when it recovered that quickly, it was very encouraging and it added to the gains. So let's see what tomorrow brings. No predictions, but right now I think that more important level of support, intermediate term, if we pull back maybe towards this level, these the highs from yesterday afternoon, and we've got a rising 5-day moving average again, so that's somewhat encouraging. The financials, let's take a look at them. They turned around today. The market did break down below that $8.80 level. I thought that breaking below that $8.80 level would maybe lead to a quick move down towards the $8 area, but here again on the 1-minute time frame, you see it sold off, held below the daily VWAP, it recovered above it. That VWAP then acted as support, and then the market took off higher from there. Now, late in the day, we have some lower highs and some support, but still closing with a gain of 1.5% is a major victory lately for the financials. When you take a look at what, for instance, Bank of America did, it got down under $4 and actually closed positive on the day. So a lot of volatility in there. Short term, we've got resistance at the $9.40 level. If you remember, of course, that's also the closing low from last year. So $9.40. We'd seen resistance a couple weeks back. We're still below that level right now. So getting back above there may lead to a little bit further upside squeeze. I think short term support, just under $9 a share, and here we see on that 1-minute time frame that things did get, start breaking down a little bit. Still, you can't call a bottom, obviously, in these financials because they continue lower. But, here we've got, further significance to that $9.40 level being last year's closing low, being such an important level of resistance here this year, and tried to hold the support a little bit. Now we've got resistance there once again, not only just from the horizontal resistance, but we've also got the downtrend line perhaps we get another pullback in here and create an inverted head and shoulders pattern, something to be aware of. So I think breaking below 9, then you want to really have reason for concern, and really even below these lows in here, because they were they held up so long today at 905. But I think you want to give it just a little bit further room down towards that 905. That it could maybe break down a little bit further and then begin a rally if that's what the market decides is in the cards for this one. Again, no predictions, but you've got to be aware of all possible scenarios, and things are improving somewhat. The advanced decline line today was pretty positive. Let me see, is this that chart? No, that's not it. Hold on a moment. This is a chart of the advancers and decliners for the New York Stock Exchange today, and these are 5-minute bars. You can see the green is the advancers, the red is the decliners. So initially, the decliners were up near that 2,000 level. The advancing stocks about 700. They started breaking out and then held on pretty positively. 1,898 stocks up to 1,141 down. So the breadth is improving a little bit in here, and there's reasons for encouragement, but only encouragement, not necessarily to be outright bullish. The Russell 2000 did make it up to its important level in here. The daily time frame still, like I said, this is one of the biggest reasons for concern in this market is the Russell 2000. We keep banging along this trend line and finding support, but a failure there, I think, could be still pretty damaging for it. Let's keep it realistic here. A bigger level, 47.5 or so, 47 to 47.5. And we still see, lower highs basically in here. On the 30-minute time frame, we've got higher lows. We've got this downtrend line here that's still, the market is resisting getting back above. And the level that we've been keying on has been this $46 area. Let's take a look, drag that back to an hourly time frame. And the 46 area right here basically has been where the real resistance is found in this market. So that trend line now is coincident also with that level. So similar to the XLF, where we have the trend line in the 940 level, on the Russell 2000, breaking above 46 would break this downtrend line and the horizontal resistance, which might lead to a pretty decent tradable rally, perhaps back up to that 47.5 level. Still not not a bullish picture, but improving slightly. Would have been nice to see some more volume in here, similar to what we saw in the Nasdaq, but we'll take what we have for now. As far as the 10-minute time frame goes, 45 is going to be important. That's where we see that 5-day moving average. I think you can look at this little trend line and say 44.50 as well. So 45, 44.50, and then really I say 46, but the highs 2 days ago, let's say, I guess that was Tuesday, were about $46.18. So it might need to make a clean break above that with some volume to get going. And if it does, my preferred way is with the TNA to play it. That's the triple fund from Direxion, and you can see nothing bullish about this. It's got the same pattern, obviously, but if it can get above this level here, 26.25. That would be coincident with the Russell breaking above 46.20 or so. The semiconductors have been the real leader in this market lately. Still more neutral than anything, but improving here on the daily time frame. You can see that we've got a 10-day moving average above a 20, above a 50, and they've been just basically trading sideways in here. Seen some resistance up near 19, and then of course this spike high here earlier in the year. But on the 30-minute time frame, we are back, fighting and trying to hold, maintain above this level here at about 1840 or so. We had, this market gap lower as well. Buyers came in immediately today above the 5-day moving average. 5-day moving average is now advancing. And again, these charts just really put the exclamation point on the fact that we remain in a short-term trader's environment, especially when you look at the daily time frames and see that they're just turning, that they're as neutral as they are. They're getting up near the tops of these ranges. We've got to be very careful. breakouts become less likely, in this in this bear market rather. We're at the top end of the range, so you've got to be very careful. Don't let your confidence exceed what prices are capable of here. They're certainly capable of moving higher, but the odds don't favor it when we've still got such a longer-term bearish picture. Support right now, short-term at about 1830. Then I think you can look at these highs from yesterday afternoon at about 18, and then that 1760 level, which was resistance, acted as support on the open, and that 5-day moving average here today as well. So finally, let's take a look at the S&P 500. The SPY was gapped lower. Let's take a look at the daily actually. By the way, I've been posting these trade idea videos sometimes to the site, and I'm not gonna post a later video to YouTube. So if you're a YouTube user and you want to see that video, tonight I will do one, but it will not be on YouTube. Just a little FYI there for you. The S&P 500, though, still below this declining trend line, still above this advancing trend line. So still a very mixed picture. Below $86, so you have to be, continue to look at this thing with a big eye of suspicion, but also be aware that we are seeing higher lows in here. It looked like maybe, and I didn't point this out, this was going to be a head and shoulders pattern that broke down, but so far it's held above that. 86 is the key level for this market. If it can get above there and hold above there for, let's say, more than a half hour or so, then there's a possibility that we could see this market run up towards $88, and who knows where it goes from there. But you always have to just manage risk. As much as I thought this market looked bearish yesterday, today we saw, of course, that it gapped lower. You don't sell short on a gap lower. It did find a little resistance initially there, made a lower low below VWAP, and as it recovered and made the higher low and moved away from it, then the odds no longer favored the short side of the market. So it remains a very tricky environment if you're not a short-term trader. Then it's going to be more difficult for you. But again, I would suggest you take a look at and go ahead and sign up at Twitter.com.